How you doing? All right?
How about you, okay, mate?
Yeah, good. Thank you, mate.
Really good. How's the water?
Sorry, mate.
How's the water the other day?
The water. Oh yeah, great fun, mate. Love it. It's like summer. That's my life. That's what I ever want to do.
Smart.
Yeah. It's, that was one of my. I started doing goal setting last year,
Oh yeah.
and that was what I put down as one of my main goals. It's been a goal for ages of mine to get one.
Yeah.
And yeah,
Seater, isn't it?
I never put them.
It's a 3-seater, isn't it?
Yeah, CD. And I've never been able to get one, but then I set it as one of my goals. I had a couple of other goals as well, and yeah, it does help when you start doing goal setting.
Yeah, nice, mate. Well done.
Yeah. No, I haven't done my goals actually for this year, so I should do it really. But
Get on the board, mate.
yeah, need to do another vision board. I had it printed out and everything, and it does just change your mindset to doing stuff.
Yeah, doing it every day, mate. It's just that's all it is. Just
yeah,
glance it every day.
I just started to do a little bit of the Forex then, so today was almost like my first day. I'm only on demo, but yeah, I think I lost one trade out of sort of 5. I just playing with it, but it just was like little scalping. Although he's irritating, I was listening to that doctor. I can't remember his name. And yeah, exciting times. So I'll be interested to see about this banker strategy.
Yeah, mate. It's I wouldn't say it's complicated. It's just a lot to learn. I guess it's the same sort of thing. But
what's the what? Oh, I'm sure you're going to cover it, but how is it? Just a case of scanning all the charts until you find that they've dropped one?
Yeah, really, mate.
Just looking out for, okay, there's a big move there. That's probably the banker's candle, and then working out what the move is after.
Yeah, you're just trying to anticipate what they're gonna, what's gonna happen next, sort of thing.
Yeah.
What time frame do you find that it happens most on, Chase?
The higher the time frames, the better. The bigger the moves, mate. So if you're looking for 10, 15, 20 pips, that's fine for smaller time frames. But if you're going for the big fish, it's fairly annoying because you think HFX's mindset. This is unbelievable mindset. You just got to sit on a trade sometimes for 1, 2, 3, 4, 5 days. You could get into a trade and it just consolidates for 2 days, and you're just like, come on.
So they don't do like the banker's candle every day.
Yeah, they will do on different pairs and different different time frames. They're just trying to find them basically.
So you're going to build a chart a lot to take Jason, Phil?
I typically just set alerts, mate. So usually I do all my analysis on a Sunday evening which is what I'm going to start doing with everybody else. So we can all jump on. It is quite late because obviously the market doesn't open until 10. So usually go on about 10:30, 11 o'clock, start doing it. But that pretty much sets you up for the whole week then, and then you just set alerts, and as soon as they come in, you just jump on then.
Well, I think that's like I've been going on the guides, going back and forth the charts on the guides today now. I just need to see it more. Do you know what I mean? How you find it, like?
Yeah. No,
then I'm looking on the charts. I'm scratching my head. I'm thinking, fucking hell, I've been looking on you for an hour and nothing changed.
Yeah, sorry,
on the alerts as well, do you have to pay for that because I think you get one alert? I tried to do alerts today and it said you've already used your one alert.
I think you get one, and then which is not very good. I think there's one that does 5 indicators and 10 alerts. That's the basic package. I think it's about $18, $19 a month, but if you get 30 days free, but if you kick off with them, they'll bring it down. I only pay like $7 for mine a month. I said I'm not paying it. I like it and just play the game,
Yeah.
Smoke up as an acid. Yeah, it's fantastic. It's really good, but I just can't justify paying that and obviously
Yeah,
a Menk,
knock them down.
yank with his sale. Oh, with them, Mr. Jones, I'll see what you can do. That's what we all done here.
I paid mine like on a bank holiday, and it was like a third off anyway. So I
Yeah,
just paid it for the year.
Yeah.
It's by bank holiday this week now, isn't it? Or last week?
Yeah, they do different sale, like Easter sale and Christmas sale and bank holidays and stuff. Yeah, so you might get one end of the month maybe.
Oh, cool.
If I was just you two on, so I'll share screen.
Is it any particular things you trade? Any particular pairs? Yes.
I've got my favourites, mate. But if there's nothing playing out, then tough shit. I've just got to go and try and find something else. Really, it's
Yeah.
You've got your favourites, but it depends. Like gold, I know I paid for a course last year with a guy that's in IM. He just purely does pretty much gold and Euro GBP, so he didn't do much else.
I see you doing quite a bit on gold actually. Is that just, does it move in certain patterns then? Is that what you sort of?
Gold's absolutely lethal, to be honest. You need to be very, very, very confident with it, to be honest. It's very fast. Gold typically moves 300 pips every day, pretty much thereabouts. It's never more than 5 pips either side of it. So, but with gold, you need to be able to go down on the smaller time frames and have the ability to stack trades, which I understand it, but I'm not confident enough to do it. So you're taking a trade and then you're literally waiting for it to come back again to mitigate, to come back down and take another trade. It's like taking a flight of stairs. You stacks about 4 or 5 at once. So it's quite clever how he does it. But it'll come. That's something else. There's a few different ways you can do bankers. You see, you can do like counter trend trading, or you can do pretty much the mitigation trading, the one that I sort of do, which I will cover now. So
is that the one on the guides, Jace? Is it?
Yeah, that's Michelangelo. Yeah, so he's absolutely smashing it.
I was watching him before I signed up with you, Jace. I was gonna get in contact with him, but obviously
he's quite good. He's just quite a bit arrogant. I think he's 2 above Sean. So you got Paul Turner above Sean, and then Michael is above Paul Turner. Not many people like him, but he's good at what he does. So it's one of the things. So what I'll show you first is, have you done you've done the guide stuff, on the Facebook? Yeah. Have you done anything on the IM Academy at all?
No.
Okay.
I haven't done anything on Facebook yet, so I'm really fresh to it.
Right. So this is the concept that you really need to understand, because this is the whole concept behind it, right? So if you can understand this, it's like learning to drive. As soon as you crack it, you know how to drive 10 miles per hour, 40, 80 miles per hour. Go around different gears, around corners and all sorts. So you just need to be able to learn to drive, if that makes sense. Yeah. This is it's not the best, but imagine this is all candles. Okay, this is I might be able to get a candle speed. Go speed. And then back up. Oh, that's right.
It's a cool tool, isn't it?
Hey?
It's a cool tool.
Yeah. There you go. Yeah, that's done. That's better. Right, so what we got there is a double top. Okay, and this is what a lot of people. So to start with, we've got retailers, retail traders, and we've got bankers. Okay, or hedge funders, or really big bollocks. Anybody's got big sort of money, or even not big money. It's just typically these have got big money this side, and then we're trying to trade with them. We're never ever going to beat them because they are multi-billionaires. So what the bankers do is they obviously the shitty 0.5%, 0.3% interest that we get over the whole year, they are using all our money. You can imagine how much money that Lloyd's Bank has got or HSBC's bank has got. they're using all our money, every single person that's in that bank. Say, like, I don't know how it is. Let's say it's 400 billion, whatever. Or every day they use our money, so they're borrowing our money basically to trade with. That's what they do, and that's where we get our crap interest from. So, and then we've got retail traders, which is your general sort of Joe blogs that learns off YouTube or has tried because his uncle did it, or pretty much maybe what we were like before sort of getting into IM. So anybody that's in IM is classed as semi-pro, so the bankers are the pros. So retail is literally, somebody's pissed on the weekend in the pub, says to the mate, "Oh, I did 20 quid on this the other day. Oh, I'll have a go." He signs up and then just goes for gold. And what they typically do is what is taught in the academy, which I think is wrong. Your first videos is we buy low and sell high. Yeah, that is the concept, but that's just a very, very generic sort of thing. And it'll get you maybe 3 or 4 wins out of 10, but it's not fantastic. So that's the difference. So you've got retail, which is just, like I said, just literally any random person that tries and tries and tries and follows basic structure, basic instructions. So Leon Davis, he does a lot of retail trading, but understands the concept of bankers. So as long as you understand it, you're fine. So
who's Leon Davis?
Leon Davis is an educator on the academy, mate. So he does.
Right.
He's the one that lived from Bristol in the UK originally. He lives in Australia now. He's the one that blown like 13 accounts. Now he trades with a $4.8 million account.
So he's the guy to watch, Jace, is he, for us?
No, stay well clear from him. That's what I started with. So he literally does trend trading, yeah. So you literally, I'm sure you know what a trend line is. So as soon as you get 1, 2, 3 touches, he sells. Yeah, that's all. Literally all he does, and he finds support and resistant lines with key levels. Let's say like there. As soon as they cross there and there, yeah, bang, sell. I've tried it for about 5 months, and I actually blown a lot of accounts doing it. It's okay. It's not fantastic. He doesn't use a stop loss, so if it does go, up to here, up to here, up to here, up to here, he does have a big enough account to take the drawdown, to take the.
And he'll just wait for it to come back down.
Yeah, and then it just comes back down. So, and then he posts on social media saying, "Yeah, I called this on my session," which he did call it, but people.
No one's other account could survive that.
Well, we were all hitting stop losses, yeah. So we would get in here, sort of thing. Put your stop loss above the previous high, which would be this, yeah, and then we'd be taking it down to here, maybe previous lows, down to here.
Right.
Back. Yeah, so this would have worked out, but sometimes the price would have done this, like that, and then bang.
And gone down there. You could have lost it within that period, yeah.
Yeah, and there's 90% of us thinking, how the hell has he won that? Because we all had stop losses in. It's taken us out, but he's managed to stay in it. So they add up to tricks, which is not good. These educators, it's to do with figures and numbers. They've got to hit like a certain amount of targets and whatever. But yeah, don't do that where you do. It's very, very, very easy to do. That's literally all you do is match them two up. But you'll get caught out a lot of the time. So that's pretty much what retail traders do. Yeah, that's the newbies, if you like, the retail traders. Right, so double top. Yeah, so this is what we've got on the chart typically. What the banks will do is, on purpose, they will now send money down to here. Yeah, so to move 1 pip, you need $100,000 behind you. So literally that. See that? So on 0 on the top right of the blue box, that's 0.6. That's close enough. 1.1 pip. So to move that in the market your way, you need to put $100,000 down. Yeah. So just imagine, obviously, 42 pips is, a lot of money. It's, what's that? 420 grand.
4 mil, isn't it?
But yeah,
4. Yeah.
Yeah, so 10 pips would be $1 million, wouldn't it? So
yeah,
4.2 million. Yeah, so to move it down to there is what, 8.3 million. So literally this is what the banks do, and that's how much money they will be playing with. Yeah, so that's one move they will do, right? To antagonize these people, because retail traders will think support and resistance. Okay, so we all know what support and resistance is. Oh yeah, fantastic. It's bounced off there. It's bounced off there. Now let's take it short. Yeah, we'll sell it. We'll sell it from here. Where do you put your stop loss? Above the previous high, which is there. It's pretty much in line with that. So I'll give it a little bit more breathing space, and we're good to go. We'll sell it. Yeah. So what the bank will do, they'll move it like 2 candles, for example. So you will see. Let's make this bigger. So that's it back. So let's say the banks do that candle, and then they do that candle, for example. Okay, just imagine their candles. So what retail traders will be thinking is like, oh fucking hell, FOMO, I need to get in on this, yeah, and they get in on it because they think that the whole chart is moving downwards, which it is. So this is the banker's way of manipulating the market, is tricking us retail traders to get into the market. So what they do then is they purposely, again, stick a lot of money on to take the charts back up, candles back up to where? They take all these people out. Yeah, this is your stop loss. They'll take it maybe up to here. This will push down in one way. They'll take it back up the other way. So you've got all these millions and millions of people sitting in here for a sell. And they purposely then take it back up the other way to take all these people out. So up here, you've got millions and millions of liquidity, yeah, money sat up here. Because let's say we're risking, let's say our account size is 2,900 minus 1% of that 29 quid. So let's say that I put my trade on there and I'd be willing to lose 1%. Yeah, we're risking 1%. So the bank has just literally taken £29 off me if I had a £2,900 account. So that's just me. Yeah, typically imagine, let's say there's, I don't know, 180,000 people that trade that. That works out as £5.2 million that's sat in this red zone here. Yeah, so what the bank has done is literally wiped out every single person. It's taken all that liquidity. Liquidity means there's money just sat there. Yeah, there's literally money and money, millions of money sat there. And then what they'll do is again purposely push it down the way that you originally wanted to go. And this is where shitloads of people, including me, I used to lose my shit. I was like, what the fuck? I've just put a trade on. I was like 18 quid in profit. I've let it ride. It's hit my stop loss. And now it's just gone bang. And it's landed all the way down here. It's super frustrating. But that is literally what bankers are doing. That is smart money. And obviously works the other way. Yeah, buys or sells. They take you out. So let me try and find you an example.
And then what chart are you looking at this over?
This is a 4-hour chart, mate. So this will happen on every single time frame, anywhere.
What indicator have got on with the numbers on the edges? What's that called?
Say again, mate.
What indicator gives you the highs and these are the highs and lows, isn't it?
Yeah, it's called pivots HL, mate. So yeah, your numbers will be put in for you, which is good. I can't find anything. Let's try 1 hour. Yeah, you could say that's one there. So you've got liquidity up here. So yeah, so you've got money sat up here. So people are getting in for sells up here. Millions and millions of people coming in on sells, let's say here. Yeah, because of this area here, it's bouncing off support and resistance sort of level. Yeah, and then you've got more in this area here. Yeah, all this stuff here. Everyone's selling here, so it's pretty much not far off the same sort of line. And if they were going to get in here, they would be sticking their stop losses above the previous high, which was here. yeah, to take it short, to take it down. So send back. There you go. So what they've done, they've intimidated people, tried to invite them to push it down. There you go. Yeah. So let's just move this for a minute. It goes up here. Everybody's like, oh, it's rejected 1, 2, 3, 4, pretty much 5 times. It's done a fairly big drop because that's on the 1 hour. So it's dropped. It's dropped what? Yeah, 17 pips, which is not huge, but fair enough. People are like, oh my god, it's moving. I need to get in. They get in. It drops a little bit, 28 pips. So people are in profit. What happens then? Bang, all the way back up to here. So they take all this liquidity out. You see where the red is? They take all this money, they push it back up, and then what happens? See you later. Massive, massive, massive move. And that's what people are after. Yeah, so
when you're getting in on that and you're then cashing out at the bottom of that.
Yeah. I wouldn't hold it for that long, but yeah, that's the idea, mate.
How far would you hold it in, Jace?
It's up to you, mate. So whatever you're happy with.
Yeah, I know, but I would probably say to myself, fuck it, I'll go for the big one, and that's how I don't get the results you get, look.
Yeah, so that's where
what I'm trying to do is get a bit more concrete, you know what I mean?
That's where greed kicks in. So typically,
well,
I've done it, mate. I still do it now. Don't get me wrong. But what the important part is to move your stop loss into either break even or stop profit. So if it does come back up and you were 120 quid in profit, at least you're taking something off the table. Yeah. If it's 80 quid, you're thinking, well, you know what? I could have taken more off, and it's just a learning curve, mate. So that's where market structure is very, very, very important. You need to be able to understand market structure if it's going up or down, or when it breaks, which I'll cover in a minute. So yeah, that's the idea of the bank. What the banks do, yeah, they invite people, they tease people to come in. So you've got millions of people, millions amount of money selling. They come down to here, they're in good profit. And retail people, they don't understand to move, their stop losses and why. They've got no idea. Like 91% of people don't understand what smart money is. So I don't know how many people who trade Forex, but it's millions, if not billions. So that they're literally ripping people off on purpose. Barclays have actually been fined for doing this, but they carry on because they're making so much money from it. They've got some software that are able to apparently read where all our stop losses are, but they know, they're clever. That's what they do. If I can understand what they're doing, obviously they know what they're doing because.
But they've also got enough money to do whatever they want, haven't they? So
yeah, of course, mate. Yeah.
It makes no odds because they are the biggest.
Biggest.
So on that then, so what point would you have sort of we've seen that move, and then where would you sort of look at getting in just as it's coming? Because it's got to almost know when it's coming down, didn't you? How many candles would you wait to confirm it's moving down?
That's not. I don't really like. It's not the best of examples. So we'll find current price. So what you are looking for is. Let me delete everything. So even though that is a concept, you just need to understand it. It doesn't always happen.
Yeah, doesn't always look like that, but it's the concept behind it.
So these are pretty much the steps that I take for getting into anything. So yeah, that's quite a good example actually. So here we've got so you need to identify breakup structure, like BOS we call it. So that's pretty much the first thing you need to do, because what we know so far here is, if one of you can answer me, which way we're going.
Sorry, it's what is moving it?
Yeah, we're going upwards. So what happens is we just need to identify when it breaks structure. Yeah, so this is our recent low. So if we stick this on, it might show us. There you go. Yeah. So it just shows
Right, so-
our recent low. You don't need that. It's not paramount, but it does help. So I'll teach you without it. So that's a double bottom, obviously. So that's your previous low, and then we've got a double top at the top as well. Yeah, here and here, which I don't really pay much attention to all this. It's just good to know it, understand what the market's trying to do. So it's up, 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 and then as soon as it's broken that level there, we're obviously now in a downward move. Yeah, so obviously we're pushing downwards now. Okay, so it's changed direction. So that's your first thing, identify the break of structure. So the harmonic scanner, if you've got the platinum pack on the Academy, you will get the harmonic scanner for free. So
I heard that Michael talking about this a lot now. What's the crack with that? The scanner, I don't know much about it. I used to have it before, but I didn't have a clue what I was doing then.
It's I can't show you because I haven't got the pack at the moment. It's quite easily. The harmonic scanner will be something like this. Where are we?
I think you can still log into the pack even if you're on HFX, because I logged into it before.
I might try, so it should be able to. Harmonic, is it?
I can't remember what it was. Let me have a look, because I'm
There you go. I mean, let's find one. There you go. So it's just literally what this is a 24/7 scanner. It scans the whole market for you. It takes all the hard work out for you. It's based on an algorithm. So all this X, A, B, C, and D. It's a shape. So this one's called a cipher, which I've never actually heard of. It's got a shark, a crab. You got a butterfly, Gartley. They're just different shapes, basically. Yeah. So none of that is really important. So what we're looking for is for the D point. Yeah, if it's at the top, we're looking for to take it down on a sell. Let's find it. And then you go. If it's at the bottom, we're looking to take it up. Yeah. So this will tell you.
Okay.
So as soon as a D point is within or very, very close to the entry point. So this is all based on an algorithm system. It's all built in for you. Don't take just these trades, because I've tried it about 150 trades and that's pretty much 50-50. So yeah, it does work. I don't know whether it's got better. So what obviously this, if you got in here, which it did tell you to, enter here, you could have hit TP1, take profit 1. Yeah, so we'd have hit that within 1, 2, 3, 4, was it 15 minutes time frame? It's not much though. What is it? 30 pips? 13. Yeah. So that means 14 pips, not 141.
Yeah.
It's very strange why they do all those things. So yeah, that's on a pullback now. So I would imagine it's going to push up to TP2 now. So that's not relevant. All you're looking for is you can just literally take that scan and you're thinking, look, it's on a buy. Sure. The D is at the bottom, so we're looking to take it up. So all you do is just take that USD, JPY, and then you go over to TradingView and find USD, JPY. Don't take the smaller time frames. Take the hour, the 4 hour, or the daily. So let's check out GBP, NZD. So that's at the top.
You're looking for a sell.
Yes, yeah. So you got 2 entry points here. So that would be your stop loss. Yeah, see the stop at the top there. So anywhere within these 2 green spots, it's identified anywhere in that area really, which it has done. It's hit TP2. Yeah, you back test there and they all hit, but if you take them, it's just devil's advocate. None of them fucking hit. But yeah,
does that I'm assuming does it move? Yeah. Not always on that position. So, for example, what we're seeing now, when it was at the point, it might not have been there. Is that the sort of?
Yeah, that just be careful. That D point does move. You can move it manually, so it could have been down here.
Yeah.
Check like 2 hours later, and it's all the way up there.
It's moved back up to cover, make it look like it. Well, not look like it is, but it's made it more clear where it should have been.
Yeah, it fits better there.
But really. It's to be used with like another confirmation, if anything, to look like that. It's saying that it could go down. Let me look at my other analysis and see if
it matches up.
It all lines up with what I think it's going to do, sort of thing. Yeah, got you.
I've never used it, so unless.
So you don't use this on the bank as NGS, do you?
No, a lot of people do. I think David does. David Routledge, Healy's partner. He does the bankers stuff. So yeah, he does use it. I think just to get sort of.
Because I seen Connor was using this. Was he does pitchforks? Was that the same sort of scenario then?
Yeah, pitchforks. Yeah, it's pretty much pitchforks is a different strategy again, but you can combine the both of them.
Yeah,
pitchforks.
picking up the points on this to then mark out to where his pitch is going. I haven't, like I say, because I was doing HFX, I didn't really pay much attention to them other live sessions, but I've just noticed really doing Forex, it seems like there's not more money to be earned, but just sort of like where when it's moving, it feels a little bit more confirmed. You know what I mean?
It's the risk to reward, mate. So
yeah,
I'll go over that in a minute. But yeah, obviously remember you need to have the candle up there, so that's no good. That's played out already, so that would be no good to us.
No,
you need a fresh one. So that's pretty much done his move. It's done what it's gone to.
And what time have you got them on the 4 hour there as well?
So that's a fairly big move.
So would you do most of your and like sort of getting in on these? I know it's obviously each to your own, but like, what's the benefit of jumping in on a 4 hour chart to a 5 hour chart?
It's
5 minute chart. Do you know what I mean? What's the?
It's just more powerful, mate. So it's the higher the time frame, the chart respects the higher time frames a lot more.
And then the smaller time frames are just for entry points, if anything.
Yeah, correct.
Yeah.
So you chop down to the smaller time frames to get your entry, which I'll cover in a minute. So you'll get more opportunities on the 1 hour really. So that's just literally about to take off now. So that's what Euro USD. So that's still in the entry zone really. I would ideally like this to happen. So a nice, fairly strong candle pushing away to give you some, what do you call it? Confirmation that it wants to go in that direction. But yeah, like I say, I may start using it. I never have.
I've lost the edges. I still don't know what this has got to do with the banker strategy.
You just take this, mate. So if we jump on here, this is kicked out Euro USD for a potential buy. Yeah, so maybe 2 of these will match up with a banker strategy. Not every one of them. It's just an extra armor for you to take trades, really, mate. So if it matches up, great. If it doesn't, it doesn't. Yeah, just move on to the next one. So we can check this now. Euro USD. So you just come on here and see where it's at. So this one is, if the D is the bottom, you're looking to take it up. So obviously buys. So we'll go over to our chart, Euro USD. So looking for buys now. Yeah. So no, don't really like it. Nothing. No, it's. You could take it because it's just filled in this imbalance here. This big imbalance, so it typically rejects off when it comes to fill in the candle, it'll bounce the other way. So you could take it, but it just makes it too complicated for me. I just don't like it. I don't really use it because there's nothing there, to be honest, for me to take it.
Doesn't line up with what your usual confirmations would be, so it's just more of a punt than a.
I do want it to come back up to this orange zone, but orange line, but yeah, it's you're only going off this really. Even it's not fantastic. No, I don't think so anyway.
No.
You can use it if you want to. Yeah, so that's your first thing. Identify breaker structure. I would do that all day long rather than take a Harmonic scan, because market structure it's the tarmac for the road. It's literally everything. You really need to understand the market structure. It's very, very important. So see, as soon as it's broken, we have then got a low here. Yeah, because that is lower than any of this above it. Then we've created a higher low, because obviously that high is lower than that high. Yeah, so we've got our high up here, a new low, a new higher low, which obviously means we're going to push down again now, which we did do all the way down to here. Pull back again, down and so forth. Yeah, so now this is a break of structure. So we've got break of structure. So you need to identify where the IC candle is. So what an IC candle is an institutional candle. Yeah, that is the smart money's concept candle, it's the banker's candle. Yeah, and that's the most important one, really. So we are at a different time frame.
So is that when in the apex of that sort of structure there, about the very top, is that what we're talking about? As in they're hitting the resistance and then they pulled it down and then they've nipped it up? Is that the sort of look?
Yeah, really, mate. It's not overly to do with support and resistance. It's just that concept of pushing price one way and then immediately taking it down the other way, which it did do here. So it pushed up and then it took the price down. So what an IC candle is the last up before the big move down. So I would argue it could be this one. So it's the last up before the big down move.
Okay.
This one here, last up before the big down move. Yeah. So what the banks have done, obviously, now is they have pushed the price up from here up to here. Yeah, and they will have a buy on now. Yeah, so they are now in drawdown. Okay, so long position. They basically pushed the market up. Obviously, it's gone the wrong way. Yeah, and this is what it's called mitigation now. So the banks have put a buy on, they put no stop loss in to push up the market on purpose, and then they push it down the other way. So they have two positions on. This is now called hedging. Yeah, where you hedge against yourself. Don't ever do it unless you've got about 500 grand in your account.
Yeah,
you put in a sell and a buy on exactly the same time. And you just obviously, as soon as one goes up, you buy, you take profit, and then obviously the sell is a major drawdown. It could be minus 200 quid, minus 5 grand, minus 80 grand. And
it's going to come back the other way.
Yeah, until it comes back the other way. It's like a seesaw, it's got to balance itself out. You can then break even. And this is exactly what the banks are doing here. So they pushed it up. So now they're a major drawdown. Yeah, so let's take all the way from the top there down to the bottom. They will be from the top there to the bottom they're now 504 pips in drawdown.
Yeah, so I see what you're saying. Yeah, so then they're just they know the market's going to be moving that way now, and it's just in for the sell.
Yeah, so they've sold it and bought it. So they've got two positions on. So obviously bought, buy is up. So at the moment, it's in the total fucking wrong way for them. So this is the most important part for us now, because we want this chart to come all the way back up to that level. Yeah, where they bought. Because this here could be like minus 1,000 for them, minus 3,000, minus 4,007. It could be minus 10 grand down here. Obviously, when it comes back up, there'll be minus 8,000, minus 5,000, minus 4, minus 2 grand, minus 1.
Oh, I see what you're saying. They're going to be. I see what you're saying. Okay,
now,
They're
now claiming all their money back, and they're now break even. Yeah, where they bought. But they've
got enough money to sit there and just because they know it's going to come back up anyway.
It's like our banks when they goes into overdraft or a credit card. When you use it, obviously it goes into drawdown, and until you put that money back in, it'll slowly come back up. And this is exactly what the banks are doing. It's quite hard to understand in the start, but that's the concept of it. It's drawdown, drawdown, drawdown. But this is what we're looking for. Is we want the chart to come back up to mitigate. To mitigate basically just means for the banks to come back up to mitigate out of that position, to pull out of that position. Yeah, so they'll make no money off that buy. Yeah, they've made their money off all the sells. Yeah, so on the buy, all they want is their money back to break even. So that is where our point of interest is, or area of interest, AOI number 6. Yeah, so that there would be our main point of interest. So it's not a fantastic example. So we can use this one. So let's say 30 minutes. So just chop and change between different time frames to find out. There you go. So see the hollow one. So that is the last up before the big down move. Okay, it's not this one because that went down, that went up, that went down, but it just consolidated, and then it went up again, and then went down for the big move. So that is our.
What candlesticks have we got, Jace? Because you've got 3 different colours on here now.
No, the hollow, mate. I'll turn it off for you. There you go. So
right. So what did when you put that on it? What did that mean then? Why was the one hollow?
It's just an indicator that helps you identify the banker's candle, mate. So that's called.
And what's that called?
Order block.
No, I prefer it with that on it.
Say again.
I prefer it. It just gives you a bit more clarification, you know.
Yeah, it does, mate. But you've also got all these little ones in between, which, can put you off. So you can easily do it without it, mate. You're just literally looking for the last one before the big drop. Yeah. So you're just waiting for it to come back up to that area to mitigate, because the banks are currently again sat in.
Right. So you let the drop go then, Jace. Yeah, you don't enter in the drop, no.
Say again?
You don't enter in the drop at all. You just wait for it to come back to the back, the what's it called? The banker's candle, yeah? IC candle.
Yeah.
And then you enter the opposite way, yeah?
On a sell, yeah. So what they'll do is, so you see the purple line. That's my IC candle marked out there. Yeah. So the purple box. So let's change it to 1 hour. You will have to chop and change to get a decent candle. Anything like this is far too small. They do matter because they can be literally tiny at times, but ideally you want the bigger candles. They work a lot better. Yeah. So when you chop to the 2 hour, the candles change. So you see that one now has got a wick on it. So that's slightly higher basically. So let's mark out that orange. The body open is the most important part. So that's where they will mitigate from. If we drop it down to the 1 hour, the candle has changed. See that? So the orange one, the 2 hours there, but now we've got the open of the 1 hour time frame down here. Yeah, so we can move because what we don't want to happen is for all this to do this. It comes up to sort of here, and it leaves without us. Yeah, so
yeah,
just in case it was sat on the 2 hour, and then it just comes slightly and misses us and goes, and we just lost a trade, which doesn't happen that often. But so then,
okay, so what just on this one then, what we're saying is, you now could be waiting obviously days because it's going all the way down and waiting for it to come back up, and when it comes back up, then you're getting in for the sell. So if we pull that chart, if you can pull that chart right out.
Yeah, it's still not done anything yet.
Got ya. So we're literally waiting for that to come back up to there, and then you're thinking of selling.
Yeah.
Will you find these candles again in this trade, or will you just wait for that to come back up? Because you've got a trade set up over here now.
Yeah, I've got into this one here, mate. So you can get within the trade, sort of, that's a bigger time frame. So these are smaller ones within the bigger structure, if you like. Yeah, so let me just mark this one out. So here we've got, see that candle there, and then this one here. My guess would be they are equal highs. What is sat above equal highs? Liquidity. Yeah, money. Yeah, so there's money sat there. So what the banks are trying to do is take all these people out. They literally want to take them out. Yeah, so there's thousands, millions of people sat there. Yeah, their stop losses are above the previous highs, which is these, that, and that. So, for example, people would have got in, let's say here, for example, where do they book their stop loss? Just above the previous high. That's a retail trader. Yeah, taking it down to there. or even lower, to be honest. Retail traders will typically take it down to the previous lows. So these are lows down here. Yeah, so
Why have you gone in for a sell on this other trade edges?
here, I'll show you now, mate. So
Does it always go down then? Like what's the reason that it wouldn't go back up to where they were and then go up?
it will do. It has to go back up sometime when I really
No, I know it will go back up, but what's the reason that you're then going to go in for a sell? Why isn't it going to just carry on going past it?
It's to do with market structure. So overall, we're bearish. We're pushing down. So we're going to take sells.
Oh, okay.
Yeah. So here, people would have got in, but their stop losses above the previous high. They're trying to take it down to here, so they're still in the trade. Yeah, they're in profit, but they're still in the trade. To come back up, push down a little bit further, come back up. So I want to take it down to here, but retail traders want to try and take it down to maybe even lower. And what will happen, hopefully, 9 times out of the time, they'll do this. They'll hold on, and then all of a sudden they'll go all the way back up here to take their money to break even. What happens? They take all them people out, and they're literally kicking themselves. Yeah, because that's people being greedy again.
I felt like that. I was doing that today as well. I was literally sort of coming into. I know I'm only on demo, but I was coming into profit, and I thought, oh, is it going to move a little bit more? And I just
yeah.
And I thought, oh, I could have just nicked sort of like 10, 20 quid out of that. Instead, I was waiting for 30. But yeah, that's just
Yes, that's the overall trade. So we're looking to come back up to this IC markup, so institutional candle markup area. So that was the last up before our move. So it's just a massive swing. So all we're waiting for is this. Yeah, for that, and then we
got yeah. That's obviously a big one. So when you say we're always in a bearish market, is that like all markets then?
No, at the moment we're in bearish because it's how the market is laid out. So if you
on this one,
yeah, we're overall
got you
downwards.
Yeah, so the banker's strategy can work the other way, flip side. Yeah.
So as it has done here. So this is where you can do 2 twin trades, which is pretty complicated. So I know I'm waiting for it to come back up to this area. But what happened was here, this green candle is my last up before the down move. So I marked it out. See the orange line? See the thin orange line? Yeah, let me take this away. There you go. See the orange line at the open of this green candle?
Right.
Yeah.
So that was your last up before the down, not that one, because that was my last one, this one. At the current price, when I was looking at this, it was last up before the down move. Therefore, there's liquidity here. So the banks are trying to take all this out as well. So I know the banks want to do this. They come back to that area to break even and then push down, which it's just literally started to do. I'm in this.
So there's bankers moves within the big bank move as well. So there's lots of different bank moves.
Yeah. So what you can do now also is I would be taking this down to possibly that'll be my first area of interest. Why? Because there's liquidity sat here. See the blue box? So underneath here, there's people buying.
Yeah.
Yeah. So this is your answer for working the other way. Yeah. So let's say people got in, let's say roughly here. We go back to where the stop loss below the previous low, we'll say here, this one here. Yeah, that's your previous low. Yeah, so they'll just put it under there just to cover themselves basically. What happened? What's this? That is called an FU candle. It stands for fuck you. Literally, that's what the bank call it. Fuck you, see you later, bye bye, take the money. Yeah, first they wiped them all out. These guys are no longer in the trade.
Yeah, right. Got you.
Because the banks have purposely taken them out. They've taken their stop losses. Yeah, so this stop loss was sat at 84,068. Why there? Because, retail traders, they've been taught over and over and over of whoever, including me, when I first started, to book their stop loss below the previous low, which is this one, just to cover. Because, what usually happens, the market comes down and tests that area again, and then pushes up. Yeah, which they don't know about the bankers stuff. The big daddy comes in, the bank, fuck off, see you later, thanks very much for your money, and then pushes up. Yeah, so these people are really pissed off because they wanted to go in that direction, but they were in profit, and people just don't get it until you know about it. It's so frustrating. So that is
Cheeky
literally the bank.
bastards, really, are they?
Say again, mate?
The cheeky bastards, really, are they?
Oh yeah, that's fucking. Everyone hates the banks, mate. yeah.
Cheeky, I bet honest, it's cheeky as fuck, like.
That is a perfect trade. That is. So this I pulled down. So now the bank, we need to come back down to here now to mitigate out of this area. So I'd be looking for a buy back up from here, maybe to my original overall target, which would be up there. Yeah, so you've got to, it's like building a house. You've got to put different sort of foundations down, different blocks to get to the bigger sort of picture. Yeah, so why there? Because that was the last down before the up move. Yeah, so let's mark that out. The body, remember, not the wick. Okay, so the body here, the purple body, the purple is the down candle before the up move. So that is our institution candle.
And that's where you would be, that would be an entry, Jace, would it?
Yeah, typically, well, I like
Basically,
to sometimes watch and see how it reacts. You know, people would say maybe this has come back straight away to mitigate them out. See this wick here? Yeah, so it's come down, pushed up, come back down, mitigated their money, and then gone. Yeah, but I
Do you
would
still get into a buy on there, or would you just wait for it to come up the top and then try and get in for the sell?
I think it's too close. Yeah, so I
Yeah.
in for, because I know this is going to come down. Well, hopefully. Yeah, so
Yeah, for
come
sure.
down to here, and then that is going to retest, if you like, or double mitigate, take the money to break. The banks need to break even. Yeah, so that probably that would have been too early for them. Yeah, so they again, remember, they're in drawdown now. They put a sell on to push the market down to take these people out. Yeah, so obviously a sell, it only went down to there, so it moved that quickly. They've gone up, and they're now in drawdown, so they need to come back down to break even to collect their money. Yeah, so they have to come back to here. Yeah, so it's typically between the open, the body open, and 50% of the body. So if you take your fib, you can take your fib and it'll mark out 50% for you. So from the top to the bottom.
I thought it's not. Oh, it's not from wick to wick, is it?
No, forget the wicks, mate. It's the body's the most important part, buddy. Yeah,
I
so
thought it was. Yeah. No, when I was watching that Mike, I thought it was from the wick to wick.
yeah, you're thinking about doing a high to low, which is correct, mate. You go from wick to wick.
Right.
Yeah, what I'm doing here is calculating the 50% of the body.
Oh, okay.
Yeah, I'm just using this now as a ruler, basically. Yeah, so see 50%. 50% is literally 50%. It's halfway of the candle. Yeah, so I go from top to bottom. I measure it. I mark it out with the orange line again. So 50% of that candle is literally pin perfect in the middle. I can delete my fib. Now I've got the open and 50%.
And just say it again. What's the 50% line? Their mitigation.
It's the area. Yeah, so you'll typically see the mitigation come within this area. So that either the open, so that's your zone basically. Yeah, so what I would do is I'll have my rectangle, I'll mark it out, and you can set different templates. So I'll put now this as my IC markup area.
That's how you do it.
Which is my institutional candle area. So now I know that is the area I want my candles to come into.
Right. Yeah, because when I'm looking at your charts, it looks so much more clear to me. Do you know what I mean? Mine is scruffy. I haven't a fucking clue, to be honest.
No, the one you sent to me early on is good, mate.
Was it? Yeah.
So
because, yeah, go on. Sorry.
What I'd be looking for now is another reason it wants to come down to this purple area. So let's drop down to maybe 30 minutes and see what else we've got. So typically I'm looking for imbalance of the market, which is just a gap in the market. We don't really have much. at all, to be honest.
What's that? Like a large push, like a
Yeah.
large can leaving a big gap, like.
Yeah, a massive gap. So you'll typically have imbalance in a lot of places, mate. So like this here. So see that wick there, and this wick here. Yeah, so there's nothing between there and there. Yeah, so this candle body here now is pretty much naked. It's not been filled in. So my analysis, I think I've showed you before. You're building a house. You need a wall, obviously ceiling. You need another wall. The market is exactly the same. Both sides of the market needs to be balanced at all times. So this is your one wall here. So whatever goes up must come down to the side to balance the market out. Yeah, which actually I've just spotted it has done. So see this wick here? That now has filled that imbalancing, that gap. Okay, so if we're going to mark that out from wick to wick.
Excuse me.
Across. So that would have been our imbalance. So IPA, improper price action, IPA.
What? All right, well, let me write that down. IPA.
It just means it's nothing wrong with it. It just means that the market's moved so quickly, it's not had the chance to balance itself out yet. So that's the IPA. So these wicks have come down to fill that area in.
This strategy seems a bit more concrete, so to speak. Do you know what I mean? I know it's a lot to learn, but you're not just pushing fucking buttons, like.
Mate, if you can learn this, it's game over, mate. You know, the bankers literally, they're the beast in the game. You know, if we can trade with them, don't ever try and beat them, because we never will. Just try and understand where they're going. So if you're going to come to visit me, hopefully soon, you need to set your sat nav. Yeah, it's the same as trading, mate. You need to know where the price action is going. Yeah, so time frames, price action doesn't understand time. It understands action, price movements, in market structure. It doesn't know it's 6 o'clock in the morning. It doesn't know it's 5 p.m. in the afternoon. It just knows, oh, I need to go over there. I need to go to Cardiff. I need to go to London. I need to go to Edinburgh. Yeah, so these are different places. So the market knows it needs to come back down to this area to fill this guy in. Yeah, so when we set off from our home, we need direction. We know where we're going. Yeah, so if you go into the shop, you think, oh, I'm going to take that road that way. Obviously, subconsciously, we don't think about it. We just do it. It's pretty much the same as the market. The market, you need to understand, it's the same as when we trade. This is my end goal up here. So how do I get there? Yeah, I firstly want to take it down to here. Do I wait, or do I capitalize on the move? Yeah, so I can, because it's set up nicely, last up before the down, it's come back up, mitigated in that area, bang, sell, down. Yeah, get some money out of the market. What was that? That is 46 pips. Now, if you're going to standard lot size on that, which you shouldn't be until you've got 10 grand in your account, that would make you 460 quid. Yeah, just from there to there, 46 pips. So from then back upwards, from there to there, would have made you 104 pips. So that would have made you about £1,000.
What's a normal lot size now? So it's £1, isn't it?
Well, yeah, a standard lot size is 1.00, which is same as basically. But you need to times every lot size by 10. So you actually, it's £10 per pip. So if you're putting 0.10 down, so on the MetaTrader 4, if you're putting 0.10 down, you also need to times that by 10, which gives you £1 per pip. Yeah, 10p times 10 obviously gives you £1. So every pip, that would have given you £46. Yeah, 46 pips at £1 per pip obviously gives you 46 pips. But if you're putting £1 standard lot size down straight away, you times that by 10, that gives you £10 per pip. Yeah, so 46 pips would have given you £460.
But obviously it can go up as well as it can go down, can't it? So that's where you can get caught out.
Yeah, so that's why it's very, very, very important to put your stop loss in. So that is your maximum 3% risk, just like HFX. Don't ever risk more than 3%. How you work it out, go to nashmarkets.com. You can put whatever your account balance is. Yeah, 55 grand or whatever you want to put in there. let's say it's 2 grand. Your account leverage will be 1 to 500. Probably that's what.
Oh yeah, that was another question I had exactly. So 1 to 500. Okay.
Yeah.
1.5. Yeah, that was a question I was asked. I didn't know.
I think mine's not 1 to 500. Yes, I don't think.
It doesn't overly matter, mate. You just need to be a bit more careful. It's just again like an overdraft. Yeah, the bigger the leverage, the more drawdown the account can take. It's quite a bad thing, really. So if you've got a smaller one, you're better off, to be honest, mate, because you got a smaller leverage to play with. To be honest, risk percent 2%. So it's worked out straight away. 2%, 2 grand is 40 quid. So I know straight away before getting into the market, I'm willing to lose 2%, which is 40 quid. But obviously I could gain, 10, 12, 15%. And that's the benefit of this compared to HFX. Yeah, so this now here is a 5, let's say it's a 5 to 1. Yeah, so this, so this red block here would fit into the green 5 times. It's like going to the bookies. It's a 1 to
Oh, okay.
Every £1 you put down, you're risking £1 to get £5 back. Yeah, which is a good. It's not a bad bet. Yeah, so the risk to reward is 5 to 1. So you could typically lose 4 trades because you're only losing £1. Yeah, so let's lose four trades. We've lost £4 if it hits our stop loss 4 times. On the 5th one, we go and win £5. We've actually got our £4 back and £1 profit. So the risk to reward is a lot better than HFX. Whereas with HFX, obviously, if you lose one, you then need to fucking win 2.
Win 2 back.
Back and a bit of profit. So, if you can then be very, very, I'd start with a bigger stop loss like this. I would highly recommend it. But when you can get very, very, very clever and smaller stop losses, this is the sort of thing you can do. Look at that, 23 to 1. So you then could possibly lose 22 trades on a row and still be up if your 23rd trade came in. Yeah, which is what Michael Agent Martin did. I think he said on the video, didn't he? He took 25 trades. I think he lost 22 or 23, and he was still up.
He said
One of them will go, right? Got you.
He was 20% up, wasn't he? Mental.
Yeah, he was still 20% up, and he lost. I'm sure it's 22 or 23 trades out of 25. He won 2 or 3, and he was still 20% up. Yeah, so the risk reward. That's why a lot of people do the forex stuff. The risk reward is fantastic.
How long do you sit on a chart for a day now, NGS? Because of I've been down on the lower time frames today, so I've been doing it. But I wasn't looking for trades really. I was looking for like the candles. You know what I mean? Just because it's more movement there.
Yeah, there is, but there's not much scope in it, to be honest, mate. And you need to be very, very quick in and out.
I weren't really trading because my mind was fresh coming off that thing off the guides. Look.
Yeah.
That's why I was on it. Look, because like this could take days, really, couldn't it? Do you know what I mean?
Yeah. What you're looking for? So on a Sunday evening, I will literally do all this, right? So let's delete all this. Yeah, so you always typically start on a daily, yeah, so just to get the overall trend direction. So here we can see overall we're going downwards. That's it, that's all I do. Drop it on a daily, down to the 4, and start to see what's going on. A bit like a heart surgeon, I don't know why I always use this analysis. So the surgeon needs to cut the skin to have a deeper look, or even get a microscope out. It's the same, we're zooming in, chopping it down to different time frames, and we need to see what's going on with price action. Yeah, price action is very important. So
by price action, are you on about like trends still?
Price action is just basically highs and lows, mate. Yeah, so what the market is doing. So you've got a high and a low, high, so forth. You can mark them out if you want to, which I would do, mate. And after like, I don't know, 2, 3, 4 months, you'll start to just see
just noticing.
Yeah, you'll just be able to spot it straight away. It's good practice, mate, just to put all these things in. So yeah, 4 hour. So really, anything over here is fairly far back because that's what 26th of August 2020. Yeah, anything here. So my really point of interest would be so straight away what I've noticed is break of structure. Yeah, it's pushing downwards. It's pushed down here because we were on an up move. If we look here, we were overall upwards. Yeah, in this mini move here. Yeah, what happened then? It started to push the other way. Yeah, now it's broken this area here, and it's broken here as well. When I say broken, it's just creating new lows, lower high.
So we're able to find an entry on our end, Jay. So the entry, this is what I'm struggling with, is the entry point of it.
Yeah, so as soon as you've identified the break of structure, mate, yeah, you
Right.
just let it ride. You've got to let it ride because what we know it needs to do is this. Yeah, scoop.
Yeah.
So we just wait. You just identify break of structure. As soon as the low has been formed, yeah, you'll know obviously it's been low formed. What you need to do is, so see here, that is your latest high. So I would mark that out and set an alarm on it. And that's it, just leave it ride out. What we're looking for is what? The last high, up, last up, before the down move. Yes, come down, 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 down. Stick a fib on it. So this is what you were trying to say early on, mate, from wick, high wick, down to the bottom wick. Where does that match up? Pin perfect. Between the 78.6 and the 88.6 is a golden pocket.
Let me take a photo of that a minute because of
Let me delete this.
what I'm doing, Jay, is I think I'm doing is getting my fib in the wrong place, look. So
tomorrow, mate, send me 20 fibs pictures. So from high to low,
yeah, okay.
or low to high. Yeah, it works the other way, remember? From low to high as well.
What can I do to sort of pick up fibs? Because I've done 0 on fibs.
All fibs, mate, is a retracement. So again, the banks use the fibs levels. They typically line up with key levels as well. So if you look to the right, what does that match up with? See that wick here? It lines up with 8200 dead. Yeah, so quarter theory and key levels is very, very important as well, which is the banks use. So round numbers, basically. Yeah, like this 0.46, they're not interested in it. Like, or that 0.8458.
No.
They're just not. They do use them. Don't get me wrong, but they prefer the are close enough. You know, it's always not going to be perfect, to be honest. So fibs, you're just going from the previous high, mate, to the lowest points. And what a fib is, so you're going from the top to the bottom, and it's called a fib retracement. So it retraces on itself back to a key level.
Okay.
Yeah, so which is come back to retracement, a pullback basically. Yeah, it's just a tool for you to identify a pullback. And it's come into this area, to the 88.6 and the 78.6. To me, what I've been taught is
I thought it was a 70. I thought it was a 71 to 78.
Well, this is what David uses, and
right.
As a few people, it depends on what suits you. Obviously, in this case, you can't argue with 71 because it's come up to this area. So sometimes it does, mate, because you can see here on the 71, this wick here it has rejected off, but it's decided to go a bit higher into this golden area. I've never ever heard, and I've never been told 71, mate. So I don't know.
But I didn't watch the guide, Jen.
Yeah, I've watched it. Yeah.
Because of
what? Sorry.
With on it 71 to 78 he got on that. In fact, I got a picture of it now. I'll tell you now.
Why wouldn't you have gone on that other high candle?
Yeah.
The next one.
This one.
Mm.
It's not the latest, mate. So this is our latest previous high compared to this.
Right. Can I take a 40
seconds?
seconds?
Okay. So that's the previous high, but then you're going back to that one.
Yeah.
That was the previous high one from that one. Right, got you.
Yeah.
Okay.
Yeah, so you go back left, and then you drag it from left to right, from top to bottom. Yeah.
Okay.
Can I take a 40 coordinates, Jace?
Yeah, fine, mate.
Only because of Like I want to be doing what you were doing, really, and you know, it just makes sense, doesn't it?
There you go. The 71 could work, mate. I really don't know. I'm not tested.
No, do you know on your settings?
Yeah.
Can you go on your settings because of
Yeah, I'll just take a picture of that, mate. It's the same thing. There you go.
yeah, like that. But it's not with me, Jace, mate. It's fine, but perfect. Thank you.
Okay, mate.
So what do you look for then, Jace? You look for the 78 to 88, is that?
Yeah, I just draw the fib out, mate, and then because it's marked so top to bottom to the wick here, yeah, and then it's come to my area. So let's go back.
And then so obviously that's already gone past, but then what you were looking for when it reached that key area, you're looking for a sell then.
Yeah. So firstly, I would identify this as a last up before the down move. Yeah, I know it's down because it's broken structure here. Yeah, so it's downwards. So this now is my point of interest, that candle there, the green one. That's up before the down move. Right, so let's mark it off. So take your line, put it on the open of this candle. Now we've got the candle. You identify the candle. When you get an engulfing candle is just basically the next down one is bigger than the previous one. So it works the same way as on the up as well. Yeah, so for example, this one here.
Yeah.
That's a smaller down, and the bigger one is an engulfing. It engulfs, it overtakes this basically, it powers over that, which means basically it's pushing in that direction. So that went up, which it obviously did go up, not for that much, but that it's quite important. It's not important, but it does all help. So it just adds to the jigsaw basically. Yeah, so it's good that so because we've got the engulfing candle, I'd been watching that knowing, right, this wants to go down, which it did do. Yeah, because it's trying to push down. There's more momentum, there's more volume in that candle, and so it wants to go down, which it did do. Let's let it play out a bit. So this is now in replay mode. Okay, so let's say this was live now. We're watching it. Play. See what happens. Zoom it, speed up a bit.
No. It's clever, isn't it? Can you do that on all charts?
Yeah. So we're close now to. So that I've noticed that wick at the bottom.
Yeah.
Yeah, so that was my low. There you go, bang, stop. Okay, so now this has broken my recent high, which was here. Okay, so that would have been where my alert would have been. Yeah, because I know as soon as it breaks above that, it's coming back to here to mitigate out, to take the sell. Okay, so rather than me sitting there for however long that was, let's say it's 15 hours, there's no chance I'm going to sit there in front of the computer for that long. It's come down. I know it's done a break of structure, but I know it's gone down. At some point, it's got to come back up to mitigate out of this candle. Therefore, I just set my alarm at this level. As soon as it breaks, obviously I get a notification. Yeah, so I jump on the chart. Now, what I do is at that point, I remember you've got plenty of time because this is a 4-hour chart. Yeah, so don't go rushing it. It's not like milliseconds. So now I'll think, oh yeah, it looks good, fantastic. We're overall pushing downwards. So we're looking for sells. Yeah, I take my fib from the high, the previous high, to the low. Yeah, this low here. Because that was the most recent low in the market before it pulled back up. Okay, so I will mark that out. Yeah, you ideally need to do this before this price action happened. Let's do fib area. Okay. Now I've identified it as a 78 to 88.6. I can now delete my fib just to make it. You don't have to. You can leave it on there. It's just a cleaner to look at. Yeah. So I now know this is literally a perfect trade. This is.
Hang on, isn't it?
My yellow box fits into where? The last up before the down move. So it's come back to retraced my fib, which is my first confirmation. My second or the other way around. my first confirmation would have been the candle. Yeah, so it's literally like that, pin perfect, right to the line. Exactly. Fucking amazing. It's so scary what the banks do. Literally comes up, you would have entered there and then. Yeah, or roughly around about there. Okay, so where would you put your stop?
Would have had as a pending order, Jason, yeah?
Yeah, you could do, mate. Yes, I hate them. I don't like them. It puts me on edge. Yeah, I don't think I'm confident enough. I'd rather sit there and wait. You know, this is 4 hours, but let's drop it down to maybe, let's see what a 1 hour is. Yeah, so it's pushed 3 times. You could have really had 3 hours, to be honest, to get into that. Yeah, so plenty of time, mate, to sit and watch. And sometimes I do wait. If I'm not too sure, I wait for a candle to push down, not that big, because I would have lost a lot of pips there. So if it was something like this, I would have got into that probably. So this green one here is pushed up, pin perfect, hit that line, and then rejected off. So that would have been a 1 hour candle. I would have typically waited for that candle to close to give me confirmation it wants to go down. Again, it's an engulfing candle because it's bigger than the green one. Therefore, there's more people pushing down. So that's just an added confirmation. And then we've got a retest. It's tried to push up again and it's failed. And what happened then? See you later. Thanks very much. We've been a major profit. Yeah, so you could have got in, let's say there. So where do you put your stop loss? Above the previous high. So where's your previous high? Up here. Yeah, so now you're starting to get smaller stop losses. So your risk to reward is better now. If you're quite, nervous, or obviously you are both quite new to it, you could go above to this one up here. It doesn't make much difference. It's just your risk to reward will be, you'll still gain the same pips.
Yeah, just if it did go the wrong way, then it give you that extra bit of leeway.
A bit more. Yeah, but as long as you're putting 3% on there, it's not majorly. So where we're taking it, so we could, let me send this back. Yeah, so we could take it. So what I used to do is 10 pips, 30 pips, and 50 pips, and I used to put 1% on 3 trades. Yeah, so I split my risk. So we all say don't ever do more than 3%. So therefore, okay, I'll do 1% on that one. I'll do 1% on this one. I'll do
on
this one. So if I was risking 30 quid on this one, what I'll do now is £10, £10, £10. Yeah, I'll take this first trade down to here. I'll take the next trade down to probably down to here. Why? Because it's the last down before the up move. Yeah, and then the third one possibly down to, let's say there. Why? Again, because it's last down before the up move. But I won't be greedy. I'll just do maybe here. Yeah, just cut it short a bit. You'd rather obviously take profit and take money off the trade than you taking it down to here.
So do you set your take profits automatically then?
Yeah, it's all done on the MetaTrader for me on the app. Yeah, so if it goes the wrong way, unfortunately, and it hits that level, it will take you out automatically.
Yeah.
Yeah, and then obviously take profits. So I think we've got more to play. So at the moment, you can see there, purple and the green candle. So now it's on a pullback. You see the green candles here in the back. So it's on a pullback now. So let's see how it played out. Just pull back. There you go, bang. Yeah, so we've just won a trade. That's our first trade. So we've just done 2.47, pretty much 2.5%. Yeah, in one trade. Okay, so let's see what happens now. So pull back again. It's nearly there. Bang, there you go. Yeah, another trade. You've just done 3.14 plus 2.47, whoever's good at maths is what, 5.6% growth. Mm-hmm. Yeah, what was your risk? 2%. So you just risked, split 1% here, 1% there. Yeah.
And if you wanted to, obviously, you could just go in and manually close the other one if you thought, okay, well, I'm just going to take that where it is anyway, and you get another 3%.
Mate. That's what I massively regret not doing years ago. Well, yeah, pretty much 2 years ago. I've watched, and it came to, let's say, here. It was near to my take profit. And it's come all the way
back. Like, okay, I'm just going to wait. Yeah, that's what I was doing today, but it was just literally over £1 and it went the other way and then ended up sort of losing 20 quid. And I thought,
it's literally all you need. So let's see how much that was. So we entered here. So that was 42 pips. You know, it's not
Wow.
much when you're doing £4.20 or 42 quid. But when you're putting a standard lot size on, what we were talking about early on, you're now doing 420 quid in 6 hours. See the bottom right, it says 6 bars in 6 hours. So that's 420 quid in 6 hours. If that was down here, isn't it? Yes, 4 hours. Yeah, so 42 quid, 420 pounds, sorry. So that's when you've got a bigger size account. So when you've got like, I don't know, 100 grand in your account, that could have been £4,200 growth. In 4 hours, £1,000 and that's 1,050 quid in per hour. Stupid money. Yeah, and then thankfully that one came in as well. So you've just done, and that's where, you know, even me, I struggle to see the bigger picture. You've got to, you know, it's shit, isn't it, playing with 10, 20, 40 quid, 50 quid, 60 quid. They all add up, yes, but, you know, it'd be fantastic just to like that 65. So that would have been, on a bigger account, it would have been 650 quid or even 6,500. And that's where the big money is, and that's where the mindset stuff comes in. You know, if you can see the bigger picture and think, wow, it's just confidence. As soon as you get used to all this and how it all works, you can just grow and grow and grow and grow. And then obviously that when your account grows, you can start putting more trades on. See what happens now. Where this one came in. So that's current price there now. So it looks like it's going to push down that area. But like you said earlier on, Marvin, you could just say, do you know what?
Then just say, okay, well, let's take that as well where we are.
Yeah, where we are. I've done 5.5%. That was what, let's say it's 7% in total. You know what, fucking hell, 7% growth on 50 grand. What's that? What's 7? That's 3.5 grand in it. 50,000 plus 7%. Yeah, 3.5 grand in. How long was that from there to there? 1 day and 9 hours. Yeah, 3.5 grand between.
The strategy with me, Jace, right? It doesn't look like rocket science, but it looks like there's a lot involved.
Yeah, it's quite
I think it's about mastering the entry, is it? Am I right here?
Yeah, entry is everything, mate. It's kind of contradictory because I can say to you, well, it's anything you fucking know, it's not. It's as soon as you understand, it's the same with everything, mate. It looks, the concept is easy. It's just the entry points, knowing where to get in it. And it's exactly the same with HFX. We all understand how it works. It's just getting in the right place.
I think it's staring at the charts as well. I just know that I'm looking at when I'm in a trade. I'm just staring at it all the time. It's just sort of
it's hard, mate.
You just keep looking at it and thinking, oh, it's going up and then you just got to almost just be confident with what you've done and just not look at it. It's just hard work, but very, very. This has been really good, Jason. Thank you. I've looked at it in a completely different way.
So yeah, Sunday night, like I say, start on the daily and chop down, because on the daily you'll get pretty much nothing really, unless you want to trade on the daily, but you'll be holding trades for weeks and weeks.
Oh fuck that! I'd rather lose the money. I was honest.
So there you go. I didn't even take this. Look at that. This was set up from last week, and what's happened? It's done the trade I wanted to do.
So I'm
waiting for it to come back down. Yeah, so let's go to the 1 hour.
That's a big move as well, isn't it? But what sort of like numbers was that one in?
Yeah, that's I don't know, what's that? 300 pips, is it? Yeah, 313 pips. So
how much?
313 pips. See up here?
Yeah.
13.3 pips.
13.3.
This one here, 313.3. 313 pips.
It's 313 pips. Oh, blimey.
Yeah. So with a JPY pairs, you don't move the decimal. So it's 313.
Oh, okay. Just the JPY pairs.
Yeah, and the gold you've got to move the decimal twice.
Oh, okay, that's
something like that. I don't know how it works. That's also in the academy, in the Forex Academy. I'm sure it is.
Yeah.
Do you use the banker strategy a lot on gold then, Jace? So is you trading gold?
Yeah, I do gold, mate. I've literally been fucking done over backwards by gold quite a lot. My own fault, really, mate. But I've lost literally thousands to gold. So it's on the back burner. But yeah, it's just more than getting my confidence back now, mate. So I've been doing this. I really regret not sticking to this. So I started with this about 2-3 months into my trading, which was what 23 months ago. So just under 2 years. So if I'd carried on with this, mate, I would literally be very, very wealthy by now, I'd imagine. But there we go. It's shit happening.
Yeah. But I found that because I was doing the Forex before, didn't have a clue what was going on. I've got the HFX, so I've come back to this now, and I see him up.
Yeah, you will do.
Is that normal, or because?
Yeah, really. HFX, you've kind of dipped your toes in again, really, and understood. You've been looking at charts again, and I think a lot of stuff will come back to you now. And it does take time, mate. It's what just shy of 2 years for me. I'm still literally learning. I learned something new again early on. What it was.
I think like the fundamentals of this is HFX, isn't it? If you can understand this, then it makes, if you do dabble in a little bit of HFX anyway, it's a lot easier. You just do higher time frames because you know it's going to move down there for in the next 10 minutes. Your price is going to be where it is, so you can just do longer.
Yeah, typically.
Trade HFX, now, Jess?
Not much, mate. No, it does my nuts in. It gets me on edge too much. Unless I do.
It's the time scale that fries me. Fucking hell. I punch in my computer desk all the time when I'm on it.
Yeah.
If I do it, mate, it'll be 5, 6, 7, 8 minutes. Yeah. I can't do it with the one stuff. Yeah, just practice finding the candles to start with. Just go through every pairs and see. So just start on the 4 hour, the 2 hour. You typically find the 4 hour and the 2 hours the same, and then the 1 hour and the 30 minutes are very close.
So what do you reckon I should be looking on then? What? Just for this candle now. Just
start on the 4 hour, mate. Just do just all day tomorrow. Just go through. There's enough pairs, mate. There's what 30, 40 pairs. Just go through them all.
Yeah.
Identify the last up before the big down move. So all the opposite way, obviously. So this here now is the last down before the up move. So that's the important candle. So this is a perfect opportunity to show you how to take 2 trades.
Yeah.
So here, last down before the up move. Where did we mitigate out of it? Did we come back down to it? Yeah, of course we did. Where? Here. Yes, mitigated out of that area. It's done it again twice. Yeah, so you could have got in pretty much. Depends how many pips it was. They were doing quite a lot actually. It's on a 4 hour. Yeah, so you could have got 83 pips out of that move. So from there to there, up to you if you wanted to take it out, or just let it down. You would obviously come back to pretty much break even, but then you would have gained 177 pips, or you could have bought another trade on, cash that out without being greedy. You've got 83 pips up, come back to here to the retest and enter again. Yeah, so, and then what you could have done, so you could have, delete that, it was long. So let's say we just got in here, okay, off this one, last down before the up, comes back down, mitigates out of here, yeah, and shoots up. Let's say we took it up to here. Yeah, 149 pips out of that. Fantastic. If you were in a 10p on, you'd have made 149 quid. So where's the last up before the down move now? Here. Yeah, last up before the down move. So this one was our upward move. This one is now what? Our downward move. So let's mark it out. Open.
So now we're waiting for it to come back down to that point.
No, back to here. Come down to here and we sell it. So this was your buy. And now up here, you've got the last up.
Okay.
Move. So this is now hedging against themselves. Yeah, but you can capitalize on this. Yeah, just make sure you're not pushing your take profit above here, because there's a 99% chance it won't go higher, because the banks need to mitigate out of here first. The drop, which it did do once, maybe twice, 3 times. Yeah, so you could have possibly taken Where's that last previous high? Is this
Yeah,
one?
because it didn't go above there, did it either? It sort of just it did keep hitting up and just nibbling.
Centre back, so you could have taken that down to whichever how they try to take it down to there. It didn't quite hit, not yet anyway. It's still, you still could have been in it. You could have taken that one, and you could have taken the retest, so it come back up and mitigated again out of that area. Yeah, so we're now currently sat here. Yeah, see the purple, annoying these are, we're sat here now. Yeah, so this you could have taken up. So let's delete all that. Now let's put our fib on it. So from low, yeah, our last down candle before the up. So this is our low here, up to the top. Where does our candle come in? Golden pocket. Yeah, just a little bit of drawdown, but it's come to that area again. Yeah, once, twice, 3 times, 4 times. You could have five opportunities pretty much to get in on that. Yeah, and it will work the way around. So let's delete that. So from where are we going? Yeah, from this one here. So this is the green candle is our last up before the down. Remember, this is not here. Yeah, when you're looking at the chart, none of that is there. Yeah, so if we just jump on this now, I'll be thinking, look, yeah, that's no good. Obviously, that's been filled in pretty much. Yeah, so this now is this, just be aware of it. They can reject off them sometimes, but if it does, it does. You're not losing anything. We're aiming for this one up here.
Yeah.
Yeah, so this is the last up before the big down move. Okay.
So we're waiting for it to come back up.
Yeah, 100%. So let's mark it out. What do we need to do? We need to find 50%. So take our fib. You can do it either way, top to bottom or bottom to top of the body. Yeah, top to bottom. Find the 50%, which I can't even see it. Let's make it bigger. 50% there. Delete that. So now we've got open of the green candle and 50%. So let's line it out. So that is our IC candle, our area of interest. IC, remember, it's an institutional candle. That's the banker's candle, or they call it, what else do they call it? Don't remember.
The proper price actions, yeah? No, that's the...
No, that's imbalance, that is, mate.
Yeah.
Which is another good point. Thanks for pointing it out to me. So you've got imbalance here. Yeah, so this wick here, from here down to here. There's a gap here, isn't there, on the purple?
Okay.
Yeah, so let's change that to IPA, improper price action. Yeah, so the probability of the market coming back up to here is very, very strong because it has to fill in the imbalance. If it's going to come up to here, there's a 99.9% chance it's going to come up to here because that's where the bank is going to push it to.
Yeah.
Yeah, so, and obviously you got a massive one here as well. Yeah, so that wick, only pushed, covered down to here basically, and then this wick only covered to there. So the distance between there and there is open. Yeah, it's not being filled in.
That's all IPA.
Yeah, that's the imbalance of the market. Yeah, so we need to build our little breeze block on the other side to fill it in. Yeah, just imagine building a house again. Yeah, we need both sides of the walls to fill it in. Yeah, so that again is IPA. So you can call it imbalance, it's the same thing. If it makes it easier for you. So now what we've got is, obviously we've got 2 IPA sections. We've got a tiny one there as well. See between this one and this one, a little bit of a gap there. So
in any of this, would you not look for getting in for buys because you know it's going to go up, or you just wait for it to come up?
Yeah, I'm not looking for buys because there's no. You could do so. That was the last down before the up, and then it's mitigated here. So see that candle there. You could have got in for buys, but
ideally you want it to come up to go back down.
Yeah, typically the one I was showing you early on to counterbalance that they typically happen in consolidation areas. So when it's just moving sideways, so it's pretty much ping pong. You can take it up and down. So here it's, yeah, we're looking to come back up to this purple icy area. Yeah, so let's play this. Oh, let's put a fib on. So top to bottom. Look at that, pin perfect, right in the middle of the orange golden pocket. Yeah, between the 78 and the 88.6. Okay, so this is where it does sometimes get messy because you're trying to put another one on top of this now. Fib area. Purple is our candle. Yeah, and then the pale yellow color in the background is your fib. So try and clear it up a bit. Delete the fib. So now we know that yellow area is our area of
where it's going to retrace back off of that, maybe.
So just waiting.
Excuse me.
There you go. Bang.
She's coming.
Yeah, so that there, don't get in too early. Please don't get FOMO.
What's
yeah, you can do, but you're going to have a little bit of drawdown. Just imagine you put in big lot sizes on. So it's going to go.
What's FOMO mean?
Say again?
FOMO, what does that mean?
Fear of missing out.
Fear of missing out.
Oh,
Don't jump in too early.
I see that all the time. I never know what it is.
Do you?
That's why I asked you. Right?
Yeah, so don't get in too early. If it's going to touch, it will touch. If it leaves without us, the airplane leaves without us. There's thousands of other opportunities. It's just good practice as well. So there you go, pin perfect on the line of the fib setup. Yeah, so does it come back up to retest again? It's dropped. It may come back up to actually emit it. There you go. That's your candle. So that was off the fib. Yeah, see this one off the yellow. This one actually went in to the purple. What's our purple? The institutional candle, the candle itself. Yeah, so you could have taken two opportunities there. It sometimes just bounces off the fib, and it sometimes just bounces off, or both, basically. Yeah, so that was a good trade, really. If you had taken it off the fib, you would have been how much in profit? 158, 160 pips in profit.
No.
That's on 4
Where do you do that? The play thing, just because I want to start just practicing on the charts, because I think that's quite clever, actually.
At the top, mate. I think you do have to have the paying one. At the top.
Oh, okay, that's worth getting though. That's really good.
Yeah, it's worth having just to see what happens. See what happens now. Does it break again? Let's test it again then. See. And again. So now, now we're there.
This is where we're at. Yeah.
So it's quite hard. When do you move your stop loss to stop profit or break even? Because you would have kind of shot yourself in the foot there. If we got in here, this wick here, our stop loss above this previous high. Yeah, and we want to take it down, let's say down to the previous lows here. Yeah, so send it back. Let's say we got in here and it's down to profit, down to here. If you moved your stop loss to break even, so it's literally now a risk-free trade. So if it does come back up, which it did do here, or you'd have just been in, but this one would have taken you out. Yeah, because it pushed past your break-even point. So you've not lost anything, but you've not gained anything. But then
you could potentially leave your stop loss where it is. Is there
but you've got the potential of being taken out. So it's quite hard to find. Do you take what's on the table on offer, or do you just let it play out? Which, if you would have done here, let's move our stop loss back, if I can. Wind back. Yeah, if we would have left our stop loss where it is, and this is my massive downfall. I close my trades too early, which is not a bad thing. I still take money off the table. I will move my stop loss because I'm quite nervous because I've blown so many accounts. I just want to secure the bag. If I would have left it run, that wick there would have come into our stop loss. Maybe let's say we were minus 30 quid, but then it's pushed down again into major profits. So that would have been about 100.
Would you take that trade then, Jace? Because like the time scale on that trade.
Yeah,
what's that? It's
I would have taken that
3
all day
weeks.
long. I would have taken that all day
And you would
long.
have let it run for 3 weeks.
No, well, chop it down to a smaller time frame. You could have pretty much got the same trade.
Oh, right. Yeah.
The
I
weight-
got you.
The wick came in here, so you could have taken, I don't know, from there down to there. That's still 93 pips in 23 hours. Just shy
Yeah,
of a day.
that's a lot, isn't it? I'll be well happy with that.
You imagine you're doing what, let's say it's 93 quid. It's still, we're all here to make money. We've got to start somewhere. So you just got to build and build and build and build. That soon changes to 280, 360, 4 grand, 7 grand. I don't know whether Sean wants me to tell you, but he's well into thousands per day now. So I'm not going to tell you,
yeah.
but he's making big money. So he literally was 6 pips in profit of the day, and he was sat at £480 just off 6 pips.
And he's doing forexes mainly, and is it now
doing this? Yeah, he's doing bankers.
Yeah.
So if he was sat at 6 pips, that is literally what's that, 6.5. That is 480 quid worth to him, because his lot size is so big. Just imagine what his size of his account would have been down there.
Yeah, it's just crazy. I tell you what, I wouldn't be on the tools doing my plumbing. I'd be well off it. Fair play to him for. I saw him on the lives the other day saying about couldn't be bothered to go into the customer's house. I'm like, yeah, I can see why.
Yeah. So that's just literally click through the pairs. So there you go. I've set this one up already. I'm waiting for this. So EC is engulfing candle. So the bigger candle. Yeah. So there you go. It's only a tiny little candle, the green one, but it's still the last up before the big down move. Because you just got to identify them candles. That is your small. Maybe go to 2 hour, might be a bit bigger. Where have we gone? Yeah, it's a little bit bigger.
In the Discord, are people putting what their thoughts are of situations in there?
Not many, mate. I've put it forward so that people can post.
Obviously, I know you're only going off people's opinions, but it's just
in the bankers strategy on Discord, I put it forward for people to put their like this now, like a potential trade idea. We're hoping obviously for it to come back up to here and then to do that. So I do post them, but obviously I say do your own risk management. What's it called? Analysis.
Make your own analysis and opinion on it. Yeah, for sure.
And obviously, make sure you're using major risk management, and it's up to them if they want to take it. I'm just trying to help people. But
I like them.
Did you put these Jays?
Them templates as well. That's good, isn't it? How do you do them templates?
These blue ones.
Like when you just click in it and then it's made it for you. So I know you've done the rectangle, but then you press template. Where do you add them?
So if you just draw a blank template out first, so mine's sort of preset. I don't know how you change it, but click on settings, mate, and then you can just change the background, different colors. You can add text to it.
And where do you save that as a template?
So if you just whatever you want to put it as, you can use it over and over and over and over again. Go down to template and then click on save as.
Oh, okay, cool.
So them ones now are my fib area, which is the yellow one, the IC market, which is the purple one, and the IPA one, which is the blue one. Because if I click on that now, the green one at the top will change to IPA.
Yeah. That's what I saw you doing earlier. I thought, okay, that's quite good. It's marked them up quite nicely.
You can change the different size writing and whatever else. Style. You can have it just to extend all the way through, or you can just have it without. I like to have mine extend right, because if I'm working here,
you want to, by the time you come back on it later, you don't want to miss that. Yeah, for sure.
I don't want just a bloody small little rectangle over here and think, oh shit, where's that gone? So I just put it all the way through. So now what I've done, look here now, this is literally a perfect example of just waiting and waiting and waiting. This could take me, I don't know, maybe 3 o'clock in the morning and I miss it, or it takes 4 weeks to get back up there. But what I'm waiting for is for price to come back up and take them out. So that's previous, their double tops there, yeah. So take that out firstly, which is a good sign, because that's what the banks are going to do. They're going to take all these people out, and then break of structure. Yeah, that is break of structure, because at the moment we're pushing down, aren't we? Yeah, we're pushing downwards.
And that's what you've got your alarm there for. Then.
Yeah, there you go. So the orange line, as soon as it crosses over there, and then I'll see it. I'll say, well, yeah, it's pulled up. I'll obviously note it down, and then I'll be like, well, I want it to come all the way back up here, so I'll just move it to these highs here. So if it
So even though that it was going up, you wouldn't get into a buy there. You just wait until you get up to your area, right? Okay.
you
Yeah,
can,
this is.
you can do, mate, but it is quite
But
hard.
no, this isn't. I see what you're saying now, because you don't know what it's going to do. It could just still go up and then go down until it starts reaching its.
So there's a liquidity sat there as well. So the bank will want to take them out as well. Yeah. Anyway, you see just like equal highs or equal lows, there's a liquidity sat there, which is just orders basically. So last up before the down, we just want it to come up to that area, so where we are, purple area, and then there you go, take the sell, because we're overall pushing downwards. GPP.
Yeah, but it's I just feel like it's more accurate than anything I've ever done before. Do you know what I mean?
Yeah. Yeah, you can't get any more accurate than this, mate. Really, they're, like I said, they're the big fucking bosses that control the whole market. They're literally.
And on these templates, that all these drawings that you've done, can you almost take the drawings off and add them back on again?
Yeah, so you can just either delete them, or you can delete the whole thing, and then you can click on undo, and it'll come back again.
Oh, okay. Okay, cool. Because I'm just thinking, if I was like looking at other charts, thinking of doing something else, then how would I sort of just? Can you just hide them for a second while you're checking out other stuff?
Yeah, you can. I think it's down here, isn't it? Is it layers? Yeah. So you can just hide each one if you wanted to.
Oh, okay, yeah. So you can almost save them in there,
click them back on,
or put them in almost like a folder or something. I can see folders there now. Okay, cool.
Yeah, but
cool.
That's one thing I would highly recommend, is just sticking to one thing. I really regret jumping from fucking all sorts. Look at this here. Massive IPA down here in balance. It has to come down at some point. So if we're taking a sell from up here, there's a good chance it's gonna. Well, it's just filled this now. So there's an imbalance there, so that's filled. Yeah, so it needs to fill down here, and there's another one down there as well. See that from that wick down to that wick. There's a big imbalance there, and that's based on the 2-hour time frame. So they're big gaps. They have to be filled. Yeah. So what we'll do first, this is a good trade actually setup. So this will typically come to this area, I would imagine. It'll do a fuck you candle and take all this out up here. See that they're all 1, 2, triple top. It'll take all them people out and then drop down. Yeah, so just be careful of the FU candle, the fuck you candle, because it does literally shoot up and then instantly comes back down. Yeah, they literally do it on purpose. So that'll be a good trade to get in on.
So you'd get in for your sell after the FU candle.
Yeah, just be aware of it. What happened?
Just be aware of it.
I'll watch it then and see what it wants to do, because it could possibly shoot up, come back and retest, and then go back up again.
Yeah. So it's still.
How long have you been practicing this, Jess?
Say again, mate.
How long have you been doing this consistently now?
Consistently, about 2, maybe 3 weeks. I studied this for about 7-8 months when I first started. I just didn't stick to it. I didn't understand it, to be honest, fully. I thought it was far too complicated. Which
the concept of it just makes a lot of sense now. Now I've understanding about this imbalance, and it's going down, it's got to come back up, and then I'm just looking forward to looking on the charts really now and just pointing out these points.
So what do you think you've done different this time to last time, Jess?
Just studied more, mate. I literally studied a lot more. I just had enough's enough, you know. I was doing okay before, but I said, you know, I've got to study hard now, and that's the only way, mate. And I've studied and studied and studied, and a bit like you, mate. Now I've gone back to it. I understand it like, you know, fucking 10 times over now, mate. I've just been practicing, and just go back, change it to like 4 hour. Just go back, mate. Anywhere in the charts. It's like just find the last downs and last ups. There's a one here. Last up, 4 down. That didn't quite get there. There you go. That could have been it.
Basically, looking for the end of the trend line, really. Is that right?
Yeah, you could say that, mate. Yeah, it's down there, isn't it? That's the last down before the up. That didn't quite get into there. You get some, you know, you just don't work out, mate.
Yeah.
So we do lose. There you go. That's one there. So last up, that's a massive up. That is before the down move. Last up, before the down. Yeah, it's come into that area, and you could have got, you know, a quick 237 pips out of that. Well, it did take 3 days, but you know, that's the potential of it. Maybe drop that down to a 2 hour. Oh, fuck, I've lost that now.
Yeah, I mean, even if you're nicking 50 pips, don't matter, does it? It's just the
literally 10 pips a day will give you 70 pips a week. You know, it's 280 pips a month. If you're doing it in lot sizes on that, that's 2,800 a month. You know, it soon adds up. It's just get the repetition going. It's just the same with everything, really. It's just yeah. What else have I got? GBP. So to start with, I'll just literally put an orange line in there, wait for it to break structure. I'm just set an alarm. That's it, and then I'll analyze, because there's no point analyzing now because everything will change and chop in the meantime. There you go. That's a good one. Last up before the down. Yeah, see it here. The green one. Last up before the big down move. There you go. Bang. Yeah, pin perfect. Down it goes. What was that? Enter there. Down there. 270 pips in 5 days. It's exactly the same concept. That, you know, just change it to 30 minutes or 1 hour time frame.
So on that one, I'll just back. What pair was you on this a minute ago?
Yeah.
So where this is at current price now, would that be the last up before the down, or is that it's not the good bit? It's not an engulf candle. Am I like right at current time?
Yeah.
No, back at you wait where you was, but let's go back about 10 candles.
Oh, right here. Yeah.
Forward a little bit. Go forward. Current time. Keep going towards current time.
Current time here.
Yeah. So just before that, that previous like there.
Yeah, that's pretty much the last up before the down.
That's sort of point that we're looking at.
It's, to me, that's too close together. Yeah, so the banks need time to basically to rip people off, basically.
Right.
Oh, okay.
This is what I'm confused about. You know, how long do I have to wait?
Yeah, so you look.
Oh, I'm also thinking big now as well, because we're actually waiting for that whole entire loop, aren't we?
Yeah.
So if I've got a big one up here, but it hasn't finished its loop, I'm just looking for positions where it's going to come back up to. Okay, yeah.
So we're looking for that. There's not a fantastic candle body, but I can see the wick. So drop it down to the 1 hour to get a bigger body. Yeah, still nothing there really. So let's drop it down to 30.
Yeah, I'm going to draw that shape out because I'm looking on too much of a smaller mind set on that one. I've got
It's not great to be honest, but 4 hour. No. It's still good enough. You know, it's done its job pretty much. You go orange line. Look at that line. It's gone slightly above it, which is nothing really. It's just starting to drop now.
Awesome.
The best ones are when it breaks structure and then comes back up. Yeah, so it's change of direction basically. They're the best ones. Such as going up. Yeah, pretty much them really. So it's broken structure. When I mean it's created new lows, so we know it's coming down low, but we also know it has to come back up to mitigate. So the banks are in hundreds of millions of pounds of drawdown, so then they're never going to let that run and run and run. They have to come back up to get their money. Yeah, and then what they'll do, they'll sell from there, and then that's the ride that we want to get in on. With them,
and that's where they're making their money then on the next one down, right? Got you.
Yeah, so here they will control the whole market and take the piss out of retail traders, and then we know now what they're doing, so they will take millions of, they're basically robbing people basically of millions of pounds, and then they're giving it back to the market but making money here, all here. That's their move.
Oh,
Yes,
that's not right.
they take all the money, the liquidity here. So,
and that's why you're saying get in for the sell, because that's where they're making their money, right? Yeah, for sure.
Yeah, so there's no point going in for a buy because we even got fucking 500 billion to argue with the banks with. So they're the big boys. So just follow them really. So yeah, that's.
So how many trades do you on average take a week of this, James?
Yeah, about 2 or 3, mate.
Right.
If that really.
Do you spend much time on it then?
No, not at all, mate. So now you can see that alert. That's it. That was set about Sunday. So what day are we now? Wednesday. So that was set 3 days ago. So
yeah. See, this is where I think it could suit me slightly better. That it's not engulfing my life. I could almost sort of see an opportunity and take it, opposed to being on it every day. Like today, I've literally been working, but then every 5 minutes I've been looking at the charts, and I'm just thinking, like, looking for opportunities instead of big opportunities.
Yeah, if you drop it down from 4 out to 15, 5 and 1, you'll get plenty of opportunities inside there. But we want to go for the big moves. We want to go for the big daddies, really. It's you can get like 10, 15, 20%, but if you do that 3, 4, 5 times a day, you're spending quite a lot of time on the charts. So you just want to go for the big fucking firework, really. Catch them moves. It's up to you if you want to just scalp and
you get a little bit of you can almost have a little bit of a scalping budget, and then as long as you're not blowing loads of on your account, but you've got more chance of doing it then,
yeah. But
just not being successful, isn't it? So just whatever it takes to get successful, look.
Yeah, really, mate. Whatever suits you. Really.
Basically, I've done a load of stuff now, and this is the one now I got to make work. Otherwise, I'm fucking it off, man.
Yeah.
Well, the score, Jace. I phone you all the time, text you all the time, man.
Just stick to it, mate. I know it's easy to say, but you just literally have to. And if it doesn't work for you, just like HFX, you're not had much luck with that. So just find something that does work, and if you're good at it and you enjoy it, just master that, mate. There's plenty of money to be made on the market.
Can I take a picture of your rules that you had?
Yeah, fine, mate.
I got to go to bed as well, Jace. Thank you for your time. We've had 2 hours out of it, buddy.
No worries, buddy.
Thank you, mate. It's been there.
I'll make this a bit bigger so you can see it.
But it's clarified a lot of stuff for me, Jace.
Missed it. Thank you.
Remember number 13.
What is that on? I didn't read that.
Don't be a greedy prig.
Don't be a greedy prig. No, that is me, mate. I need that one.
We're all the same, mate. I still do it now. I got to say to myself, Jason, close the trade. Close it.
Yeah. Be happy with what you got.
Mrs. screams at me like, "Yo, you fucking 380 quid up. Close it." Like, no. Not more.
Yeah, we got like, it's like 70 quid. Like, I'm thinking, fuck off. Like,
that's the hard part, really. But yeah, hope that makes sense. But if you go on the academy and watch, so go on the academy and watch Jenna. So the academy, login. Now that I've kind of half-heartedly, shittily explained it to you. Now, when a professional will explain it to you, you'll understand it even better.
Understand what they're talking about. Yeah, for sure.
Um,
I mean, I feel like I'm coming away knowing fucking bags now. Anyway,
what the fuck are we on? Go live, and then go to Forex.
So I have to change over, Jace, will I?
What you want now, HFX?
Yeah.
Yeah, you need to change over to Platinum. So there's a lot of guys here that do trade smart money. So where's he gone?
So how much is Platinum a month now, Jace?
It's the same.
it's the same price, isn't it?
Rock, where's Rock? There you go, Rock Kumar. So he literally does smart money concepts. He's one hell of a geek, and he's very, very clever at it. It kind of mind boggles you. I watch him sometimes, but he goes so deep into it. It's unreal. It's literally like a professional professor or PhD in bloody Forex. But yeah, he's shit hot. He's amazing. But I would firstly watch.
So smart money is bankers, yeah.
Yeah.
We're just calling it bankers, but it's actually smart money.
Yes, it's a different one. I would firstly click on Zach McDonald, not him, but to click on him, you need to click on watch all recordings, and then in the search video, search for Jenna. Yes, she's an Australian girl. She's amazing at Forex, and she's literally very, very super basic at breaking it down. She's not an educator. She's just that good. She's getting on board with these people.
Right.
But yeah, I would watch all. I've actually got 11 of her recordings as well that she sent me on Zoom. The recordings, so I'll send them over to you. Please watch them. She's amazing. She does live sessions every week, so I can add you to that Discord if you want to. But I would really watch these first. She breaks it down very well. This is where I learned a lot of her. So they're the lads that are going over like really complicated stuff, which I kind of still don't understand what they're on about, to be honest. Just overcomplicating it. So whereas this Jenna, she breaks it down massively, very, very well, and she's Australian. But yeah, she's really good. So yeah, I'd watch her. So just search for Jenna underneath Zach's recordings. But yeah, Zach's good as well.
He does it as well, but obviously, yeah, she's a little bit more clearer.
Yeah, and then you've also got what was it called? The boot camp. What's it called? Bounce back. Is it this one? Yeah, so the guys that do smart money on Academy, they've created their own. Yeah, it's this one. Yeah, so they've created their own boot camp. That I'll get you a link. There is a way that you can get into it. I think you're meant to be. Here it is. So it's all there. So they're still part of the Academy. So if you click on that, Fibonacci, click here to watch. Yeah, so you need bounce back. There is a way that Connor has got into it without needing to pay for the bounce back. So I'll get you that link. But yeah, it's fantastic. This just breaks it all down for you. Yeah.
What's it called? Bootcamp what?
Bounce back.
Bounce back launch.
Yeah, .com. Yeah. But I don't think that'll work because obviously it's just kicked me out now. You need to pay for the bounce back through the Academy, which is what, $22. But don't pay for it. There's a way that
There's a hack.
Connor, yeah, there's a hack. Connor's got into it somehow. But yeah, this is all literally smart money. It's phase 1, 2, 3. There's a lot of content in here, but it's all good to watch. Right, guys, I hope that's helped.
Yes,
Thank you for that, mate. It's been, and you recorded this session, didn't you? If you have it, I'd love to re-watch it.
Yeah, no worries.
And would you mind, obviously, if I do draw up some charts and send you some of my ideas, you just sort of say, that would, or that's not what I would think about and stuff like that.
Yeah, please do, mate. And then pretty much on a Sunday evening, and maybe once in a week, I'm going to start doing sessions on it as well. So we'll have a lot more.
I really appreciate your time tonight, mate. That has been really helpful. Thank you so much.
Okay, guys. Bye-bye.